The housing crash of 2025 is no longer a grim forecast. It is a catastrophe unfolding before our very eyes. Across the American landscape, cities once vibrant with prosperity are now tragically submerged, drowning in endless listings, choked by relentless price cuts, and plagued by desperate panicked sellers. Home values are collapsing, plummeting by a staggering 50 to 80% in the most vulnerable markets. For countless families, the economic fallout from this devastating downturn proves even more brutal than the dark days of 2008. Builders are openly frantic. Buyers have vanished from the market. Investors, once eager to speculate, are now caught in a frantic race against time, desperate to unload their properties before the entire market implodes. From the sun-scorched stretches of suburban deserts to the serene calm of coastal retreats, no region is truly safe from this brutal reckoning. Hard-earned home equity evaporates overnight. Crushing mortgage payments suffocate families, turning the cherished American dream into a waking financial nightmare. These 10 housing markets are not merely facing a crisis, they are the undeniable epicenters of this unprecedented collapse. The pain, tragically, has only just begun. Number 10, Denver, Colorado. The mile-high city, renowned for its breathtaking mountain views, vibrant outdoor culture, and booming tech scene, became an undeniable magnet for remote workers and young professionals. Its housing market soared, reflecting immense desirability. In 2025, Denver's elevated housing market flashes critical warning signs. If economic conditions worsen, it could face a severe 2008-style collapse, with home values potentially dropping by 15% to 20%. Denver's explosive growth was overwhelmingly driven by its thriving tech industry outdoor lifestyle appeal and a continuous influx of high-earning residents. This led to substantial price appreciation, over 50% since 2020, making it one of the most expensive markets in the interior U.S. However, a significant economic downturn would directly impact Denver's tech sector, leading to widespread layoffs and hiring freezes. This would drastically curtail the influx of buyers and erode the purchasing power of existing homeowners. The alarming risk for Denver lies in its already stretched affordability and the prevalence of a buyer pool with high debt-to-income ratios. With current 7% mortgage rates, affordability is already a critical concern. In a true meltdown scenario, this surplus would overwhelm reduced demand, leading to widespread price reductions and a painful erosion of equity reminiscent of the widespread financial devastation seen in 2008. Number 9, Sacramento, California. For many, this state capital represented the affordable Bay Area escape-a-haven that swelled with residents fleeing coastal prices during the pandemic. But Sacramento's rapid boom and its prior painful history in 2008 make it a top contender for a severe housing meltdown in 2025. It's a market where the dream of escape has dangerously inflated into a fragile bubble. Sacramento's meteoric rise was fueled by an unsustainable influx of buyers from the Bay Area, pushing home prices up by over 40% between 2020 and 2022. The median home price peaked around $540,000. However, in 2025, that figure visibly plummets to around $450,000. A brutal 16.7% drop, or a staggering loss of $90,000. The alarming parallel to 2008 lies in its reliance on external demand and affordability stretch. With mortgage rates near 7%, the median home price is now an immense lift for a local median income of $75,000. Inventory has surged dramatically, up 46% year over year as more homes hit the market than buyers can absorb. Price cuts are rampant. In a true meltdown scenario, this trend would accelerate as Bay Area migration has slowed and investors retreat. Sacramento's history of being an epicenter in the 2008 crash, coupled with its overvaluation from the pandemic-era boom positions it precariously for a repeat meltdown in 2025, threatening a significant loss of equity for those who bought at the peak. Number 8, Tampa, Florida. This city was once the bedrock of Florida's real estate scene, fast-growing, full of jobs, and absolutely booming in the early 2020s. Its rapid ascent, fueled by an intoxicating mix of genuine growth and heavy investment, marked it as a significant early flashpoint where a dangerous housing bubble began to dangerously inflate. Between 2021 and 2022, this Gulf Coast hotspot became a magnet for remote workers, retirees, and crucially, Wall Street-backed investors chasing sunshine and profits. This insatiable demand pushed average home prices to $383,410 in 2022, creating unsustainable price appreciation that far outpaced local wage growth. The frenzied bidding wars were a clear symptom of the bubble's formation. But in 2025, that glow has faded fast. Prices have dipped to $360, $130. The red flag waving hardest is exploding housing inventory, up more than 55% since last year. Homes that once sold in under 2 weeks now sit for 75 to 90 days. The short-term rental market is crushed, with thousands of Airbnb landlords flooding the resale market. And then there's the critical issue of buyer financing, with mortgage rates hovering around 7.5%, pricing out buyers. Tampa's aggressive growth, once its strength has left it, with overvaluation and oversupply. The very hallmarks of a bubble now beginning to burst. If current trends persist, a significant correction is absolutely on the table, threatening widespread financial devastation. Number 7. Bakersfield, California. Bakersfield was never intended to be glamorous, but its foundational affordability made it profoundly attractive during the 2020 to 2022 housing boom. People desperately fled the expensive chaos of Los Angeles and the prohibitive Bay Area. Bakersfield, with its open arms and vast undeveloped land, welcomed them. Home prices here shot dramatically from around $240,000 in 2019 to nearly $440,000 by 2022, an absolutely astronomical surge for this formerly sleepy city. But now, in 2025, Bakersfield is caught in a maelstrom of serious trouble, with prices tumbling and buyers vanishing faster than rain in the desert. The single biggest red flag, affordability, its former strength, has utterly collapsed. Incomes in Bakersfield have disastrously failed to keep pace. While housing prices nearly doubled wages in local industries, remained stubbornly flat. That immense gap created a profoundly fragile market, dangerously dependent on outside buyers. But with interest rates still hovering around 7%, a median home now comes with a mortgage payment exceeding $300 or $200 a month, a sum far too steep for the majority of local families, effectively trapping them in financial distress. At one point, nearly 1 in 4 homes was being acquired by an investor or flipper, recklessly hoping for quick appreciation. That ill-conceived strategy is now spectacularly backfiring. Many of those properties are being savagely dumped onto the market at discounts ranging from $50,000 to $100,000, simply to avert even deeper, more catastrophic losses. Should inventory continue its inexorable swell and local wages remain stagnant, Bakersfield could tragically witness home values collapse by 60%, ruthlessly returning them to pre-2020 levels. That's not just a correction. That's a second, even more brutal crash. Number 6, Dallas, Texas. The gleaming heart of North Texas, a symbol of relentless corporate relocations and a seemingly endless economic boom, Dallas has been a magnet for population growth and massive real estate investment. Its sheer scale and rapid price appreciation make it a definitive ground zero, where the Texas housing bubble inflated to monumental proportions, now making it a city to avoid. Dallas's explosive growth was fueled by massive corporate influx, a booming tech sector, and a reputation for endless opportunity. This led to rapid price appreciation, often 60 to 80% since 2020, and a furious pace of new construction across the metroplex, particularly in the northern suburbs. This aggressive, widespread building and price surge was a clear symptom of the bubble's formation. If you're finding this deep dive into America's collapsing markets indispensable for your future, please gently hit that subscribe button to discover the nation. Your support powers our vital investigations. Now the chilling signs are setting in. If corporate expansions halt jobs in tech and financial services are impacted, and the flow of high-earning relocations slows, buyer demand collapses. Inventory is surging dramatically across Dallas and its suburbs, up 45% year over year, and homes are sitting longer, averaging 75 days. Price cuts are rampant. The substantial investor activity during the boom means many are now looking to exit further, overwhelming the market. Dallas's immense scale and past growth make its potential hollowing out a truly concerning prospect, where the bubble's impact is widespread and severe. Number 5. Sedona, Arizona. This unique mountain desert town, famed for its stunning red rock formations, spiritual vortexes, and vibrant arts community, became a highly desirable destination for affluent buyers and retirees. Its unique allure drove a massive housing boom, with median prices peaking around $850,000. But in 2025, Sedona's bubble is visibly bursting, leaving it facing a painful and undeniable correction, threatening to turn its serene charm into a ghost town of empty high-end properties. Sedona's housing market was fueled by immense external wealth, a continuous influx of affluent buyers seeking second homes or a tranquil retreat. However, a national economic slowdown, coupled with stubbornly high 7% mortgage rates, is drastically curtailing this specific buyer pool. High net worth individuals are delaying luxury purchases, and discretionary spending for second homes or investment properties is rapidly diminishing. Inventory has surged by over 35% year over year, and homes are now sitting for extended periods, averaging 100-plus days on market, with a rising percentage of significant price cuts on multi-million-dollar properties. The market is seeing an investor retreat, particularly those in the short-term rental market who can no longer turn a profit. The high general cost of living, including steep HOA fees for exclusive communities, and rising wildfire risk insurance premiums further stresses homeowners. For those drawn by Sedona's charm, the housing market presents a precarious investment in 2025, where the dream of a peaceful retreat has become a financial quagmire as its boom has tragically expired and left the landscape of quiet desolation. Number 4. Las Vegas, Nevada. Las Vegas thrives on risk, but this time the house is unequivocally losing after a wild pandemic-era boom. The Vegas housing market is now collapsing faster than a busted flush. From 2020 to early 2022, median home prices shot from $290 to $1,000 to over $460,000, a staggering 58% spike, recklessly driven by out-of-state investors and dirt-cheap interest rates. By 2025, the cards have devastatingly turned, and Vegas is heading for a housing bust that could tragically rival 2008. The market is in an alarming freefall. Inventory is ballooning relentlessly, more than doubling in the past year. Homes that once sold in a weekend now sit for 3 to 4 months. Price reductions are ubiquitous. Over 40% of all listings are now aggressively discounted, many by $50,000 to $150,000. The primary culprits: reckless overbuilding and rampant overspeculation. Now that speculative investor class is in full liquidation mode. Rents are dropping, and critical Airbnb income has utterly dried up. Mortgage rates, stubbornly over 7%, have transformed once hot Vegas homes from prized commodities into financial deadweight. Even worse, local wages never justified the frenzied price run-up. Las Vegas remains dangerously reliant on tourism and entertainment jobs, many of which haven't returned to pre-COVID strength. That makes the market exceptionally sensitive to broader economic slowdowns. Should current grim conditions persist, analysts grimly expect home values could regress to pre-2020 levels, meaning a brutal 60% plus correction is absolutely on the table. In Las Vegas, the real estate dream has brutally materialized as just another illusion, now melting under the intense heat of higher rates, weak demand, and a catastrophic oversupply. Number 3. Boise, Idaho. Boise isn't just in a housing downturn, it's rapidly becoming ground zero for the 2025 housing collapse. A chilling and powerful testament to how quickly a pandemic boom can turn into a devastating bust. Few cities can match the explosive growth Boise experienced during the COVID housing boom. Between 2019 and 2022, the median home price here soared from $285,000 to nearly $575,000, a staggering 100% increase. But what goes up so fast usually comes crashing down harder. By 2025, the initial cracks have transformed into terrifying chasms. Inventory has exploded, and homes that once vanished in bidding wars now languish for 140 to 150 days as demand utterly dries up. Boise was utterly flooded with new residents and investors during the boom, especially remote workers who recklessly bid up prices. Many of those properties are now catastrophically underwater. With rents falling and mortgage costs relentlessly rising, the financial math simply doesn't work anymore. Some desperate investors are now dumping properties at fire sale prices just to mitigate their colossal losses. Simultaneously, local families are being ruthlessly priced out. With interest rates stubbornly above 7%, the monthly cost to buy a median-priced home is now over $3,800. Another critical pressure point is reckless overbuilding. The city's outskirts are tragically littered with half-empty subdivisions. Foreclosures are ominously rising again. Experts grimly predict Boise could face a brutal 60% price collapse, returning home values to pre-2020 levels. In many chilling ways, this is déjà vu from 2008, but even more dangerous. Boise isn't just falling, it's unequivocally leading the crash. Number 2, Cape Coral, Florida. Once marketed as Florida's last affordable waterfront paradise, it's now tragically at the very terrifying center of the state's housing nightmare. During the pandemic, prices exploded with unsustainable velocity, with the median home price here shooting up from around $230 in 2020 to over $470 in 2022, an astonishing 100% increase. But in 2025, Cape Coral's housing market is not just falling apart, it's collapsing with terrifying speed. The area endured massive, unprecedented overbuilding. Developers foolishly flooded the region with thousands of new homes, but now they sit conspicuously empty. Builders are offering desperate $60,000+ discounts and paying insurance premiums to lure hesitant buyers, but nothing's working. Buyers are gone. Cape Coral also suffers profoundly from skyrocketing insurance costs due to increasing flood risk. Premiums have more than doubled, with some policies exceeding $9,000 annually, making even modest homes unaffordable. Simultaneously, property taxes are rising and HOAs are demanding bigger reserves. This is triggering a widespread exodus of retirees and investors. Listings are soaring relentlessly, with inventory 3 times higher than in 2022. Over 50% of homes have endured deep price cuts, and days on market have doubled. Should these pressures persist, Cape Coral could tragically see home prices fall back to under $200,000, marking a brutal 60% or greater collapse. What was once a dream now feels like a ticking financial time bomb. Number 1. Phoenix, Arizona. Phoenix isn't just in a housing downturn, it's rapidly becoming ground zero for the 2025 housing collapse, eerily mirroring its painful role as an epicenter in 2008. Few cities in America can match the explosive, unsustainable growth Phoenix experienced during the COVID housing boom. Between 2019 and 2022, the median home price here soared from $280,000 to nearly $510,000, a staggering 82% increase. But what goes up at such a reckless speed in real estate usually comes crashing down harder, and Phoenix is already tumbling headfirst into disaster. By 2025, the initial cracks have transformed into terrifying chasms. Inventory has quadrupled an unprecedented glut, and over 55% of listings now conspicuously feature price reductions, some by $100,000 or more. Homes that once vanished in frenzied bidding wars now languish for 90 to 120 days as demand utterly dries up and investors engage in a desperate race for the exits. Phoenix was utterly flooded with investors during the boom, especially iBuyers and institutional landlords who recklessly acquired thousands of homes often sight unseen. Many of those properties are now catastrophically underwater. With rents falling and mortgage costs relentlessly rising, the financial math simply doesn't work anymore. Some desperate investors are now dumping properties at fire sale prices just to mitigate their colossal losses. Simultaneously, Phoenix locals are being ruthlessly priced out. With interest rates stubbornly above 7%, the monthly cost to buy a median-priced home is now over $3,800. While average household incomes haven't kept pace, many prospective buyers have simply given up. Another critical pressure point is reckless overbuilding. The city's outskirts, in areas like Buckeye Queen Creek and Maricopa, are tragically littered with half-empty subdivisions. Builders are offering massive, unprecedented incentives, aggressively dragging down comps in the process. Foreclosures are ominously rising again, particularly among buyers who stretch their finances with low down payments. Even FHA-backed loans are beginning to default, signaling deeper systemic trouble ahead. Experts grimly predict Phoenix could face a brutal 60% price collapse, ruthlessly returning home values to pre-2020 levels. In many chilling ways, this is déjà vu from 2008, but potentially even more dangerous, because this time the overvaluation is broader, and the economic headwinds are demonstrably stronger. Phoenix isn't just falling, it's unequivocally leading the crash. The message is clear. The 2025 housing crash is no longer a prediction, it's a full-blown disaster unfolding in real time. Across America, once booming cities are now drowning in listings, price cuts, and desperate sellers. From desert suburbs to coastal retreats, no region is safe. Equity is vanishing overnight, and mortgage payments are crushing families. The American dream didn't disappear here, but it did get distorted. Builders are panicking, buyers have vanished, and investors are racing to dump properties before the market implodes. So, if you're looking to buy in these markets, be cautious, be informed, be strategic. Not every sunny promise hides a paradise. Some are planted in markets that won't recover for years. Don't forget to like this video, share it with anyone who needs to see this vital information, and of course, hit that subscribe button to discover the nation. We'll see you in the next video, because sometimes knowing where not to buy can be the best investment decision of all.